Hey everybody, we are going to talk about Berkshire Hathaway today, which recently became the first non-technology company to reach $1 trillion market cap. We also saw in the news that longtime head of insurance for Berkshire, Ajit Jain, sold more than half of his stake that he's held for a long time, and that's prompted a lot of people to ask the question, is Berkshire Hathaway too expensive? Now, to be clear, we have no idea why he sold his shares. People, insiders of companies sell shares for different reasons. He's in his 70s, so it could just be an estate planning move for all we know. But we don't want to speculate on that. But we do want to think about whether or not Berkshire is too expensive of a stock for you and I to invest in right now. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel, and be sure to hit subscribe to my channel if you don't already. I cover Berkshire often, and as well as a bunch of other stocks and personal finance content. So, really quick, let me just share my screens. So, as I mentioned, Berkshire recently became the first non-technology company to reach $1 trillion market cap. Since then, I mean, as at the moment I'm recording this, which is on September 12th, the stock has pulled back to $977 billion. Its market cap will probably be slightly different by the time you're watching this, especially if it's significantly after September 12th. But Berkshire has been a pretty solid performer. It's up 130% in the past 5 years. It's at its all-time high. And the scale of this is to a level that even Warren Buffett never really imagined when he started this conglomerate. So Berkshire can be a very difficult stock to value. It has over 60 subsidiary companies, including insurance giant Geico. It owns BNSF Railroad. It owns a bunch of consumer-facing businesses like Duracell. It owns Fruit of the Loom. It owns a bunch of different companies in its portfolio, and it's very diversified. And as we know, as anyone who's invested for a while knows, different industries are, analyzed differently, and they have companies in all different industries. They also have a massive stock portfolio that has over 40 stocks, including large positions in companies like Apple, American Express, Bank of America, and a few others. And it also has a lot of cash on its balance sheet. As of the latest numbers, we know that Berkshire Hathaway has $277 billion, billion with a B, in cash right now. So the latter two, the stock portfolio and the cash, make Berkshire look expensive by many traditional valuation methods. If you looked at Berkshire's price to earnings ratio, for example, it would look very expensive. Plus, the fact that unrealized investment gains and losses are included in the company's net income calculations makes metrics like earnings per share pretty useless anyway. That means if Berkshire's stock portfolio goes up by 20%, even though the company hasn't sold anything, that's counted as earnings, which is kind of silly, but that's how accounting rules work. And it makes Berkshire stock very difficult for analysts to say whether or not it's cheap or expensive. But let's take a little stab at it right here. So, is Berkshire Hathaway expensive at $1 trillion? So we can remove the stock portfolio in cash from the calculation to take a closer look at what Berkshire's operating businesses are worth according to the market right now. So as I'm recording this, the stock portfolio, all the stocks Berkshire owns, is worth about $307 billion. Berkshire had $277 billion of cash, as I mentioned, as of the middle of 2024. So if we remove these two things from the calculation, that tells us that the market is valuing all of Berkshire's businesses at a total of $393 billion. Over the past 12 months, Berkshire's operating earnings, that means the bottom line profit from all of its operating businesses, not its cash, not its stock portfolio, none of that, no unrealized gains in that figure, it earned $42.1 billion. However, some of that is investment income from the stock portfolio because a lot of the stocks Berkshire owns are technically owned by its insurance companies, which are operating businesses. So if we back that out, so for example, when Berkshire's Coca-Cola stock pays it a dividend, that is considered as income to its insurance business, which is operating businesses. So if we back out investment income, Berkshire's operating earnings over the past 12 months are a little under $31 billion. So looking at those two numbers, the one on the top and the bottom, the $393 billion valuation, because when you think about it, the stock portfolio has a straightforward value that's very easy to value. And the cash is what it is. $277 billion of cash is worth $277 billion. So we can back those out real easily, and we get a market value of $393 billion for Berkshire's operating businesses. That means Geico, all those other ones I just mentioned, all combined are worth $393 billion according to the market. To me, that just sounds a little bit low for considering what Berkshire owns. But that is what it is. And investment income, or without investment income, its operating earnings are $30.9 billion. So from that, we can do some valuation metrics. So this means that Berkshire's operating businesses are being valued at roughly 12.7 times its operating earnings over the past 12 months. So that would be kind of the closest equivalent to a useful price to earnings multiple that we can use for Berkshire Hathaway. So a price to earnings multiple below 13 for any stock that is profitable and growing is not very expensive. So Berkshire's operating earnings grew by 26% year over year in the latest quarter. A lot of that was due to be fair, the normalization of its insurance business, which had a very, very good quarter. But even so, these are businesses that are growing. They're very profitable. They're largely recession resistant. When you think about like Geico, people pay their car insurance in tough times. Berkshire Hathaway Energy is a huge business. People pay their gas and electric bills even in tough times for the most part. So it's a very recession resistant business. It's growing. It's being valued at less than 13 times earnings. So I would say, if anything, Berkshire Hathaway is still a relatively cheap stock, even at $1 trillion market cap. So I've been adding to my position for 10 years now, but I would be comfortable buying shares today. Things to look at: Berkshire's buybacks. Just one condition of the buyback plan is that the company can only buy back stock, if Warren Buffett himself believes that it's trading for a discount to its intrinsic value. So Berkshire's buybacks each quarter can tell you whether or not Warren Buffett thinks the stock is cheap. They bought back stock, not a ton, but they bought back stock in the second quarter. So the company is still undervalued according to Warren Buffett. And and according to these valuation metrics, it looks pretty cheap. So I'd love to hear what you think. Do you think Berkshire is cheap or expensive at $1 trillion valuation? Would you buy the stock today? I'll do my best to answer any questions individually. And thank you for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.